What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, February 13th. Well, SPY here today, remember this is actually an ETF. It's not technically a stock. However, if I refer to it as SPY stock, SPY ETF, either way, you know what I'm talking about. Along with the S&P 500 here, of course, today, hitting a new all-time high, kind of late morning here. I'm going to take you guys through what to watch as we head into tomorrow and lay out a variety of scenarios here so that we can be prepared on both sides of the ball, understanding the psychology of what most likely both sides are looking for here. Let's start by zooming in here on the 1-minute chart. Take a look at some intraday opportunity here on SPY. First of all, by the way, if you guys appreciate me making these videos every single day, 7 days a week, maybe you get value out of them, please subscribe to the channel. It's a tremendous help. It's a brand new channel. Our goal is 1,000 subs in the next week and a half to 2 weeks, and I think we can certainly do that with your help at this rate, so I appreciate it. But SPY intraday here, making a tremendous push, not necessarily, percentage-wise, it was actually somewhat underwhelming in terms of percentage or points. But this push, I mean, the volatility was relatively low off the open, right? I mean, basically a 40-cent channel, all things considered, which is not all that much here on SPY. So by the time we started making that push, that standard deviation range from volume-weighted average price, that is such a subconscious help, and as well as a self-fulfilling prophecy indicator that I like to use a lot on the intraday charts. We never really got a proper setup. It was actually pushing at one point the 3 standard deviation range from the volume-weighted average price to the upside on that push. And actually, in this region up here, it became an incredibly interesting time to sell calls intraday. And that obviously would have worked out very well as the day went on. But as far as true scalps here on SPY today, just not clean enough. There were a variety of other names. We had a great scalp on AMD, for example, today. Beautiful to the downside. If you guys want to get those real-time setup alerts for scalps, take a look at that first link in the pinned comment. I'm alerting my personal scalp setup alerts, the actual setup, the setup that I'm watching, so it's not tremendously late, like I think is very common in the so-called alert section of the world. I've tried all different styles, and this is by far the most actually helpful, I think, for members. So take a look at that pinned comment. There's 4 varieties to choose from. The price on all of them goes up over time, but you can get grandfathered in, and people have been grandfathered in for years at this point. For as long as you retain that membership, I'll never raise it on you once you join. But what I want to do here is take a look at the volume on the 5-minute to give us some context of, so really what we're looking for here, right, is volume changes that correlate with obvious moves in the ETF that confirm or go against your bias. Okay, to try to understand, why are we looking at that? To try to understand what the biggest sample size of the market is really looking at. What does the biggest sample size agree with, up moves or down moves? Okay, so you can see here on the biggest up move of the day, as we hit that all-time high, this is clearly that biggest up move. We actually didn't really see an incredibly noticeable increase in volume, which I thought was interesting. We saw a bit of a bump in volume here on this bit of a fade that we saw, okay? And then later in the day, of course, heading into the close, we saw massive volume, but the candles themselves weren't very definitive. They were actually relatively sideways, really. So I'm looking at this fade here, and we saw a little bit of a bump. That's really my only takeaway from the 5-minute, just a slightly higher sample size, agreeing with this midday fade. Other than that, nothing incredibly obvious here on the 5-minute. So let's zoom out and look at the 30-minute and look at some of these self-fulfilling prophecy areas to watch as we head into tomorrow. Start on the 30-minute. So look, incredibly obvious here on the 30-minute is going to be that 50 period. Let me lay this out. Let's start with the bears. Let's give the bears their day in the sun first here today. If I'm a bear, I want to see a hard rejection off of a test of the 50 period on the 30-minute, break down through 5, obviously, and a head down to make a test, ideally break down through that 200 period. Now, if I'm a bull, right? First of all, I want to see 500 hold. If we see a downside test of the 200 period, that gray line, I want to see that hold as support. But ideally, my number one priority, if I'm a bull looking at the 30-minute chart tomorrow, reclaim that white line, that 50 period, retest it then, treat it as support like we saw this morning, okay, before the downside break, and then rip up out of that hole, obviously above 500 bucks a share. That's what I'm looking at on the 30-minute. Let's move on now to the 4-hour. Okay, you can see here that 50 period here on the 4-hour chart is a little lower. It's about a full percent away. But listen, that's one relatively volatile day on the S&P. That is within reason to talk about here from a one-day time frame kind of perspective, right? So here on the 4-hour, if I'm a bull, ideally, since 500's kind of in the way of making a downside test of that 50 period, if I'm a bull, I don't want to see a retest of that 50 period because that means we broke 5. But if we do, of course, I want to see it hold really well as support. Ideally, as a bull, you know, I want to see it really getting up above 500 bucks a share as soon as possible, that 50 period I'm talking about. And if I'm a bear, a downside break of the 50 period is beautiful because that means we also broke 5. And then a lot of bears, if we see a downside break there, they're going to be looking for a downside test of the 200 period. Okay, important to understand the psychology on both sides. Most important chart of the day, the daily chart. Okay, let's take a look. You can see here, obviously, we have that all-time high, 503.50 intraday here today. Now, this one's really easy, okay? That 50-day moving average is the nearest important level. It's almost 5% away, so this one becomes really easy. 500 bucks a share, all things considered, once we've looked at all the charts, considered everything, listen, 500 is the level. All right, ideally, if I'm a bull, I want to see 500 hold hard, and ideally continue pushing to new all-time high territory. If I'm a bear, reject off the all-time high, that 503.50 region, and number one priority if I'm a bear, break down below 5. Discourage the bulls. Encourage the bears. Okay, that's the psychology of the short side right now. Now, let's take a look here at the chain from today and get a good grasp on the bias, okay, from the S&P, you know, the SPY options traders today. 8 million contracts traded, good sample size. 3.7 million of those were calls. 4.38 million of those were puts. Overall, we're getting a little bit of put bias, okay, on the overall ratio. But look at this. This is really interesting. This 0 to 20 delta, that short-term speculation. The short-term speculators, gamblers, you can call them whatever you want, leaning heavily bearish. Look at this. 1.05 million calls. 2.17 million puts. We're seeing like double the amount of short-term bearish speculation as we are the short-term bullish speculation. And that's heavily outweighing, the kind of ratio that we're seeing on the overall. Okay, the calls kind of caught up. It's not quite so lopsided when you look at the overall compared to the short-term. So where are those calls coming from? Well, they're coming from the mid to longer term. Okay, because we're seeing the calls outweigh the puts all the way from the 41 delta to the 100 delta, which are the at the money, you know, the slightly out of the money, the at the money, the in the money, and the deep in the money calls versus puts. So, you know, to put that a little more simply, I think, without this heavy short-term bearish speculation, this overall ratio flips to the bullish side. So what we're getting here is the very short-term bears are overwhelmingly not believing in 500 bucks a share, is what I gather from that, right? Listen, as always, though, the options traders can be wrong, so manage your risk. Hey, if you get value out of these videos, please subscribe. Helps out a ton. Appreciate you guys, and I'll see you in the next one.